Dr. Manchanda, thank you very much for hosting us in your corporate office in Gurgaon. One of the things which has changed during COVID is that there is a larger amount of insurance penetration. Patients are more aware of their health. But on the industry side, while healthcare services has risen in terms of volume, there's been a lot of competition in diagnostics. Can you tell us what's changed?
I think there has been a change on multiple fronts. First change that I see at a consumer level is that patients or in general public is largely aware about their health and they want to proactively take charge of in terms of their prevention of health, etc. So I think the testing in general is going up, is one change that I see. The second change that I see is that people are now looking for convenience. Earlier, at least, patients would walk into our labs, stand in the queue, but it's no more like that. They actually want home collections, they want to book online, pay online. So I think convenience is another factor that actually has happened. On the business model side, as you rightly said, a lot of players have come in and we are seeing entry of e-commerce players. We are seeing entry of hospitals now getting into retail pathology and even some pharma companies wanting to come into diagnostics. So every one of them actually is trying to see that what strength they bring on table. Like hospitals generally have pathology lab on their own, so the back-end synergies are there for them. Pharma companies believe that they have front-end connect with the doctors, so they want to actually see front-end synergies. And e-commerce players are trying to say that we are trying to give a very convenient experience and also probably trying to give it a great value for money. So I think on the competition side and plus consumer changing, overall penetration levels of diagnostics have gone up in the recent past. Of course, this year, many diagnostic companies are up against a very high base of COVID, but I think that will be behind us after a few quarters. But in general, I am seeing is that landscape is changing, both from demand side, consumers are looking at something different, and as well as provider side, they are now providing much more convenient customer experience than ever.
But now that there's so much competition which has risen, we've spoken about full body checkup at 300 rupees. We've spoken about, how one of the online aggregators launched at 100 rupees in one of the cities. What is the discounting like right now?
See, in this business, if you study the P&L of diagnostics company, the reagent cost doesn't constitute much. It's a very large part of the cost structure is coming out of overheads. If you can actually do more tests per visit per patient, you are able to actually offer a better value for money. And in the recent past, a lot of bundling has happened and people are now selling these packages. So one is able to give much higher discount than what one would be able to do on individual tests or panels. That's one of the reasons you see a lot of discounting happening.
So, what is the discount that Dr. Lal's has to give now as compared to earlier?
Uh, I think honestly, we have really not chased the pricing competition. We strongly believe that in diagnostics, quality is very important. And if you look at overall healthcare spend, diagnostics just constitute 5 to 10% of the overall total healthcare spend. And we believe that patients are fully aware that if they don't get this step right, the downstream cost could be much higher. So we have always focused on the core of our business, which is quality, and making sure that we help our clinicians and customers to do a timely diagnosis as well as accurate diagnosis.
But volumes haven't fallen. There must be a section of patients who believe that, say, for example, an online aggregator backed by a strong name is probably going to give you reliable results. So, have you seen volumes fall?
I think the last 2 years have been a little bit of a change in our base due to COVID and non-COVID. But my sense is whenever you have entry of new players, they're trying to offer a great value proposition. Obviously, there are certain customers who would always try, and I think these guys definitely would have tried this. But of late, I am also finding that we are getting a lot of feedback that consistency of results is extremely important variable for them, and we are hopeful that rise in competitive intensity will actually accelerate the market growth, number one. There is space for many players in this industry, and we believe people who are quality conscious will stay with us.
You saw non-COVID revenues or volumes grow around 15% in the previous quarter. Do you see that number sustain?
Last quarter, actually, we've had base advantage because suburban base was not there. That's one of the reasons why you see that. Uh, I think we are still confident of managing our growth rates, what we used to do pre-COVID levels. Uh, I do believe that a lot of competition these days is in metro cities, in large markets. I think now tier 2, tier 3 towns are going to open up. As the penetration levels of diagnostics improve, we believe the volume growth could be much higher.
Okay, you mentioned Suburban. That's the acquisition that you all made. Um, are you happy with the acquisition, considering that the margins are lower? Majority of the revenues did come in from COVID during COVID-19, and the integration has had some hiccups.
So there is a very strategic rationale behind this acquisition. Mumbai is a very large market, uh, and Maharashtra state is even much more important market. And we found in our portfolio that this is a big gap, and we've been trying to go to that market for last many years with very little success. And this was one gap to be filled up in our portfolio. And as I've always been saying, South and West are two regions where we need to do something about. And this opportunity came our way. It was a competitive process. Yes, you are right. So it happened during the peak COVID time, and we didn't expect that COVID would suddenly slide
Right.
so fast. But so be it. But I think we have a long-term view on this asset, and we are very confident that we should be able to do something.
But where will margins probably settle at?
Yeah, I'm just applying the experience that I've had here is that if you get the volume to a particular point, margins will take care of itself. So I think our focus right now is to see if we can really grow the top line.
Okay, is that happening though?
Not really to the extent that we wanted it to be, but I think, as you rightly said, any M&A has its own challenges to start with. I think we are trying to fix up that. We are in the process of launching a big central lab in Mumbai. You'll get to hear about it. And I think we're just trying to put all those building blocks in place, and hopefully we should be able to see some growth.
More acquisitions on the cards?
Uh, I think our philosophy of M&A is not to really increase the top line. I don't think we approach it from that perspective. We approach it from market entry perspective. So if there is some M&A which helps us to widen our footprint, we'll definitely look at it, but not just for the sake of doing M&As.
Okay, so growth via M&A only if you get the opportunity. How much are you willing to shell out?
I think it depends on the asset which is there on the table. So it is definitely our part of our strategy to build business through inorganic, and there's nothing new about it because if you look at worldwide also, most companies have become bigger by doing inorganic as well. So
Yes, but is growth getting tougher, and hence diagnostic companies need to look at the M&A route more aggressively in order to shore up growth?
I think definitely diagnostics companies need to look at new markets, and on your own to go to new market is definitely challenging. So I think that opens up the whole M&A piece.
Is it enough to just be a standalone lab now? The reason I ask is that a hospital has diagnostics, an online aggregator does pharmacies, has diagnostics. So does it make sense to just do pure diagnostics?
I think it's a great question. We usually debate about this. What are the sort of adjacencies our business can have? I think the internal thinking as of now is definitely to see how do we really differentiate in a rising competition and provide greater value on diagnostics and maybe use of technology so that we can do some value-added stuff. But one never knows. I think this is an open question which we keep debating as well. But right now there's no such plan.
Okay, and radiology, ECG services at home, you've started diversifying a little bit, or was that always there?
See, radiology, especially the routine part of it, has always been there, especially in our Delhi NCR, where we have a larger share of walk-in patients. They look for some solutions like X-ray or ultrasound. Uh, but in some places where we have more network-driven model, where we transport samples more, where patients don't come into our facility, in those places we don't have radiology. But I think we do have, but a share from radiology business is right now very small. And I think that's one low-hanging fruit. You always see that, can you provide a bouquet of services both on pathology as radiology? as well as radiology.
With the kind of competition that we are seeing, we're seeing so many new players who've entered the market. Do you eventually see it probably stabilizing in terms of competition or pricing?
I think so, because if you look at before new competition came in and you just look at 3 or 4 traditional players, they were up against fragmented nature of the industry. You had single unit doctor owned or a technician owned labs. That was not visible competition at all. But now you're seeing players coming in, and now competition is much more visible. So I think within the organized, now you're seeing more competition. But I think the shift from unorganized to organized will still continue to happen. There's a large space. So it's not that they are going to take away market from established players. Maybe some bit of nibbling will happen. But my sense is the pie of the organized players will become much larger, and it will gain much from unorganized segment. And second is, though there is no hard data available, but my understanding is that in tier 2, tier 3 towns, there is hardly any diagnostics that takes place. So I think as the competition grows and the chain labs come up, they will definitely penetrate down the pop strata.
You had mentioned that nobody expected COVID to probably slide as quickly as it did. Did that come as a bit of a surprise?
Uh, I would say yes and no. In fact, we expected COVID to go, but it sharply fell down, which is actually not a bad news. It's a good news. And I think where probably some of us were taken a bit of a surprise that because the cost structure had built up and immediately to pull back is little difficult. You had built about 17, 18 facilities. We had hired people. We had also built inventories, both for reagents and other things. And I think sudden sharp fall creates a bit of operational issues.
And what happens to all of that inventory which is built up and the resources which were built up?
So I think in terms of machines, we have started doing now much more PCR tests. Good news is that it's not only for COVID, it can also be done for many other infectious diseases. So relatively now we have much wider footprint of PCR testing across the country. Manpower hiring, of course, you know that every year we have requirement to hire people. There's replacement hiring. I think all those people are absorbed. In terms of inventory on reagents, we did talk to various vendors. I think we've all sorted that out. Now I think we are normal.
Swasthfit is around 20% of revenues, and hospitals, healthcare companies, everyone's speaking about preventive health, predictive health. How important a piece is it? How are you all growing it?
I think it's a very important piece, and since you cover healthcare, you study pharma, and I actually clearly see that diagnostics is going exactly the same way. You have a prescription business, and you have a OTC business. So where OTC business, you have very less play of a doctor, and in prescription, you have too much of play of medical side, right? I think this business is also getting vertically split, where there is over-the-counter service, and you order for preventive health checkups. And that's not catered only to patients. It's actually becoming much more mass. And that's really going to broaden the market quite a bit.
And how much is it going to be in terms of sales?
Right now it's 20%. And I think I think it's going to grow. And this competition actually is driving that piece much more than the other piece.
How much do you expect it to probably grow? What are the resources you're deploying towards preventive?
It's from the back-end testing is same. I think the customer acquisition is slightly different in this case. It's much more tech-driven, much more online, much more direct-to-consumer. Communication is very different. So I think we basically have to figure a way out how do we really differentiate Dr. Lal's Swasthfit versus everybody else.
Are we going to see an equivalent of an online aggregator app for diagnostics from Dr. Lal's?
So you can actually access our brand online as well. So we have our own app. But we are not an aggregator model. It's mainly for our own brand.
But something to grow within that space in the digital
so
space.
You can access our brand and all online app we have. It works exactly the way.
And how much are you getting from digital now?
See, that number is I may not have exact number. But it's not only digital. People do call up. People
WhatsApp.
Yeah, WhatsApp. There are multiple ways of reaching out. I think all this can be put together as a tech. But I think overall net, it's 20% of our revenue.
Okay, well, 2 years of COVID is done. We're post-COVID. Now, if you have to talk about business 2 years hence, leave us with what Dr. Lal's will probably look like, what the focus is.
I think there are 2-3 things which are very important for us. It's clearly given that technology really has gone into the system, virtually every parts of the business. We are also seeing a lot of our business now coming from the collection center. So we have to get entire network of collection center, phlebotomists seamlessly integrated on a real-time basis. I think that's number one. So far, a lot of focus has been on labs, but I think to me, this network of 270 labs, 5,000 collection centers, and 10,000 pickup points on a real-time basis, if you can integrate that. Now, that's number one priority for us. Number two is obviously keep widening our footprint. We realized much earlier, nearly about 10 years before, that concentration risk on Delhi NCR is very high. We've actually been just now making sure that we keep widening our footprint. Now the Delhi NCR contribution is in 30s. So that's one, and Suburban actually has helped us even further, that now we have much higher contribution from West. So I think widening our footprint would be another.
Okay, all right, Mr. Manchanda, it's a pleasure. Thank you very much for joining in and speaking with us.
Thank you.
Thanks.
Thank you.
Welcome back. You're still tuned into the Medicine Box. Let's continue our focus on the diagnostic space and listen into Fortis's plans for their diagnostic vertical, SRL Diagnostics, which in fact might go in for an IPO. SRL has been an important and integral part of the business, but the PEs have been wanting to exit for quite a while now. It's been even pre-COVID. When do you think they will probably exit? Do you think that you'll maybe go for an IPO?
So we have had an arrangement where we had entered into a new agreement with the PE providers, so pre-investors, where we had agreed to a situation where by 2024 we would either go for an IPO or we would have an alternative mechanism of acquiring these their shares. So that plan is intact. Of course, if 2024 we have to go for listing, then we have to start preparing next year. So we definitely would.
If they find an exit, will you still list?
If there is an alternative path, then obviously listing will not be there.
Okay, so maybe there could be a listing for
Yes.
SRL by 2024.
Yes, because we strongly believe in that business, and we believe that it can be built, the further value can be built out of it, and that's why we are.
But the margins are lower than peers.
Yeah, so see, this business has grown through acquisitions and over the years. We were one of the early starters. So now there are a lot of initiatives we have taken. We are increasing the presence of our contact centers, our places where we can take samples from. And at the same time, we are also working on making efficiencies and rationalizing the lab network, for instance, improving the TAT, improving the digital experience, improving the home collection piece. Those are some of the areas on which we are working.
Where do you see margins going for SRL?
See, it has become an area which is slightly competitive. And because of that, the margins are under a little bit of pressure, but we expect them to be above 20%, about in the range of about 22-23%.
But slightly competitive. Right now, you have online aggregators, you have other hospitals, you have standalone labs really clicking at your heels at this point. How difficult is the diagnostic business?
No, I look, whenever a business evolves and there are too many players come with differentiated models, there will be a little bit of pressure. But if you see already, there is some degree of rationalization which is settling especially in terms of pricing. You cannot have a model which is exclusively based on discounting. So that is changing, and because that is changing, we are seeing that the pressure is relenting. How much it is relented is for all of us to see, but definitely some of the steam of that early exuberance is going away. Yes.
But do you think that you are in a situation where you can eventually take some price hikes when it comes to diagnostics now?
See, we have maintained the prices. Throughout this situation, the prices have not gone down. So that itself, in my view, is a good thing because in any industry, the aim is to get the prices down, especially in a consumer-facing industry like diagnostics. The idea is to keep the prices where they are. But some degree of rationalization will be required. Maybe some of the tests would cost higher and some of the tests may cost lower.
That was the word coming in from Fortis. Let's end the show with Apollo Hospital's Suneeta Reddy. The company plans to expand its diagnostic operations and is in fact also open to acquisitions. Are you looking at acquisitions in the diagnostic space? Considering what has taken place, you all have big plans in diagnostics.
Yes.
You all are looking at around 500 crores in terms of revenue, probably scaling up to around 1,000 odd crores in 3 years as well. Are you going to do that organically because of the competition?
You know, it's so easy and scalable, the diagnostic business, that you really don't have to make big acquisitions. It's like pharmacy. We only did one acquisition, but we have 5,000 pharmacies, and we are the largest player. So I think in diagnostics, maybe some small acquisitions the team might make. And the reason we do this is because economies of scale. We're setting up a very high-end genetic lab in Hyderabad. So it won't be the regular tests. We'll do the difficult complex testing, especially for oncology cases, which will mean better margins.
But is that the future of diagnostics? Because there's so much competition. If you look at the online aggregators, if you look at hospital labs, standalone labs, 100 rupee tests by an online aggregator, that's how competitive the industry is. What is your sense in terms of whether or not that's going to be lucrative at the end?
I think we've always differentiated ourselves by a clinical offering. Like I said, we will be a player at scale in diagnostics, but we will have all the high-end testing, and that will give us the margins. So currently we're at 13% in the diagnostic business, which is a healthy margin. But I think moving on with us opening out at scale, having created these labs, we have more than 2,000 touch points. So I think 1,000 crores of revenue and a healthy margin is something we would expect to see.
On that note, it's a wrap on this edition of Medicine Box. Thanks very much for tuning in.